Life Insurance Exam Practice Test Questions 9. Question 1. Which rider allows the insured to buy additional coverage without proving insurability? Waiver of premium, guaranteed insurability, accidental death, payer benefit. The guaranteed insurability rider lets policy owners buy more coverage at specific ages or life events. Question 2. A policy that covers 2 lives and pays only upon the death of the second is joint life, survivorship life, universal life, variable life. Survivorship life, second to die, pays the death benefit only after the second insured dies, often used for estate taxes. Question 3. What is the primary feature of a term life policy? Cash value accumulation, lifetime coverage, temporary protection, flexible premiums. Term life insurance provides temporary protection for a specified period without cash value. Question 4. If an insured commits suicide 6 months after the policy is issued, the insurer will pay the full benefit, return the premiums paid, pay double the benefit, pay nothing. Under the suicide clause, if suicide occurs within the first 2 years, the insurer only refunds the premiums paid. Question 5. Which non-forfeiture option provides the largest death benefit? Cash surrender, reduced paid up, extended term, accumulate at interest. Extended term provides the same face amount as the original policy but for a shorter, temporary period. Question 6. Who has the right to change a revocable beneficiary? The insured, the policy owner, the current beneficiary, the insurer. The policy owner retains all ownership rights, including changing revocable beneficiaries. Question 7. Which policy allows flexible premiums and an adjustable death benefit? Whole life, term life, universal life, endowment. Universal life allows the policy owner to adjust premiums and death benefits subject to certain minimums. Question 8. The grace period in an individual life insurance policy is typically 10 days, 31 days, 60 days, 90 days. The grace period for life insurance is usually 30 or 31 days to pay overdue premiums before a lapse. Question 9. Which settlement option pays a specific amount until the funds are exhausted? Fixed period, fixed amount, life income, interest only. The fixed amount option pays out a specified sum regularly until the principal and interest are depleted. Question 10. An annuity that starts paying income immediately is a deferred annuity, immediate annuity, variable annuity, fixed annuity. An immediate annuity begins paying income within 1 year of the premium payment. Question 11. What happens under the misstatement of age provision? The policy is voided. The death benefit is adjusted. The premiums are refunded. A penalty fee is charged. The insurer adjusts the death benefit to the amount the premium would have purchased at the correct age. Question 12. Dividends from a mutual insurance company are considered taxable income, return of overcharged premium, guaranteed interest, capital gains. Policy dividends are considered a return of overcharged premium and are generally not taxable. Question 13. Which clause protects the death benefit from the beneficiary's creditors? Incontestable clause, spendthrift clause, insuring clause, consideration clause. The spendthrift clause restricts the beneficiary from assigning benefits and protects funds from creditors. Question 14. A policy loan on a whole life policy is typically limited to the total premiums paid, the face amount, the cash value, the policy owner's income. Policy owners can borrow up to the accumulated cash value of a permanent life policy. Question 15. If a beneficiary is not named, where does the death benefit go? The state, the insurer, the insured's estate, the agent. If no beneficiary is alive or named, the death benefit is paid to the insured's estate. Question 16. Which rider waives the premium if the insured becomes totally disabled? Payer benefit, waiver of premium, accidental death, return of premium. The waiver of premium rider excuses premium payments if the insured becomes totally and permanently disabled. Question 17. What requires an applicant to have a valid medical exam? The underwriter's request, state law, the agent's preference, the NAIC. Underwriters request medical exams for high face amounts or based on the applicant's health history. Question 18. The period during which the annuitant pays into the annuity is the annuity period, accumulation period, grace period, free look period. The accumulation period is when the owner makes payments and the funds grow tax-deferred. Question 19. Which policy requires an agent to have a securities license? Universal life, whole life, variable life, adjustable life. Variable life is considered a security and requires a FINRA registration and state securities license. Question 20. Which rider doubles the death benefit if the insured dies in an accident? Double indemnity rider, term rider, spousal rider, cost of living rider. The accidental death benefit, double indemnity, rider multiplies the benefit if death is caused by a covered accident.